So I want to thank you for making it back here in Santa Barbara Real Estate Investor Association. We have Kevin Sharp here from Pintar Investments, who thank you so much for showing up.
Thank you.
You're doing great things in California. These people are doing big stuff. So I can't wait to hear what you have to say.
Thank you guys, I appreciate it. Thank you for having me. I really appreciate coming up, and it's nice to see everyone. And if you guys have any questions, feel free to jump in. This is not a canned presentation. I put some information I think you guys will enjoy and hopefully learn something from. And again, let's be interactive, and it'll be far more enjoyable if you guys participate. So like Dan said, I'm with Pintar Investment Company. We're a small real estate investment firm based out of San Juan Capistrano, and we've been doing this since 2008, 2009. We've been really fortunate where we've invested well over $1 billion in this space in single-family homes. That's all we do. We're sort of a one-trick pony. We buy homes, we fix homes, we sell them. We buy homes, we fix homes, and we rent them. And we do this for our investors. We created a limited partnership a few years back, and we've been raising capital privately for these guys. Why do we choose single-family homes? We think single-family homes is the best way to preserve, protect, and grow your income. So we can preserve income by delivering a stability of income through consistent cash flow. Where it's protected by diversification. We now have over 300 homes in our portfolio. Again, we've been doing this since 2009. So we've got 260 homes for rent today, and somewhere between 60 and 70, depending on what day of the week it is, on homes in status to sell. So they're either in construction, they're either on the market, or they're in escrow to close.
Are you strictly in California?
Strictly in California and Nevada. Okay. So we've been operating really in Southern California originally. And I'll jump ahead here to the next slide here for a second, and I'll come back. But so back in 4 years ago or so, we got caught up in the jet stream of some of the bigger institutions. So Colony American Homes, KKRBs, or Goldman Sachs came to us and asked them to be their operating partner to buy homes for their portfolio. So we bought thousands of homes on behalf of them with their money. They were not invested in the fund, but again, we were the operating partner for them. And so we were buying homes in Southern California and Nevada for their portfolios. So we did that for about 2.5 years, and since then, we've delivered north of a 10% cash return to our investors, all in return of 20%. So that 20% includes an increase in home price appreciation. We paid a lot of dumb tax working with these guys, Goldman and Beazer and Colony, and we were able to scale an operation. So we can buy a home, fix it, and sell it within 100. I think we average about 137 days now. So we're pretty fast. We do it really, really well. I'll show you guys our website, but at our website we have pictures before and after of these homes with model condition. And so if the three of us got together and we wanted to buy and flip a home, it costs a lot more money and take a lot more time to do this level of scale, right? One of the biggest things that we sort of offer our investors is we are aligned with them completely. We, the general partner, are LPs as well. So we're invested right alongside every single one that's in our fund today and that are coming in. Again, guys, feel free to ask questions if I'm going too fast here, and I don't want to kill you with data. Overlook, yes, sir.
I have a question for you.
Yeah.
When your investors come in and invest, they invest in one house at one time, or do they invest in a group of houses with a group of investors?
Yeah, no, it's a blind pool. That's a good question. It's a blind pool fund. So you come in as an LP. You are an owner in the real estate, pro rata, based on how much money you contribute into the fund. So we don't do it house by house. We don't do it renter by renter. We do, your money goes in, and I'll show you how the capital flows through the fund. So your money comes in and it goes either to a rental home or a flip home, but you're an owner in both. It doesn't matter where we put it. Your capital is in both. Does that answer? Yeah. Yes,
So
ma'am.
an LP is a limited partnership?
Yes, ma'am.
Or you-
create a limited partnership for themselves as an entity? And
No, they come in.
Your
Yeah, you come into our limited partnership, okay, as a new partner. And we did this because, 4 years ago or so, we used to have two funds. We had a rental fund and a flip fund. And if you came in as an investor, you chose what you wanted to be in. You wanted to be in the rental fund and participate in the steady, consistent cash flow that's coming from the rents and also that long-term appreciation in the homes. Or you wanted to be in the flip activity because you liked the cash-on-cash return and it was steady and the returns were a little bit bigger. The benefit too was that if you're in the flip, you could get your money out on a yearly basis. If you're in the rental fund, your capital is locked up for 5 years. So when we decided to merge the funds, we registered with the SEC, we've got a Reg D exemption, which means, all that means to you guys is that we can now meet people that are not in our circle of influence, that can come into our limited partnership, but they each have to be what's called an accredited investor. So when you join the limited partnership, it's you or your entity. So you might have an LLC, you might have a trust, you might invest through your IRA or 401k. That entity joins our partnership and you're a partner.
But you have to be accredited.
But you have to be
So
accredited.
it's the $1 million net worth or the 2,000.
Yeah, so the accredited definition is an or statement, it's not and. You
Right.
either have to have earned greater than $200,000 last year and expect to do it this year, or 2 years ago, 2 years straight, or you have assets greater than $1 million, or your trust has assets greater than $5 million. So that's the price we pay to be able to now market to anyone. And we can put that in the Wall Street Journal now, but each investor has to be accredited. Okay. This investment, though, is, while it's very simple in single-family homes, all we're doing is buying individual homes. It's based on pure fundamentals. We've got 3 million people. Population growth is 3 million a year. There's been no new home construction in the last 7 years. The average homes built in the United States since World War II was 1.2 million new single-family detached homes a year. Since then, it's been half. It's about 500,000. Of that, 0 have been built at our price point. We buy homes less than $500,000 for the flip, and less than $200,000 for our rentals. And there's been no new home construction since 2006 on that price point, especially in Southern California. The other thing is we're still buying below market value, our current market value is below replacement cost and below peak. Right? So we've been 2006 was the highest price point there was in Southern California. We're probably 70% of that today in our markets. So we're still able to buy below that. The vacancy rate for rentals is well below 5%. Ours is below 3% in our portfolio. And all this means is the lack of quality homes available, low supply, high demand for rent. That means home prices go up. We've all seen that up here in Santa Barbara for sure, and in Southern California as well. The rents are consistently growing. One of our favorite slides here, I'm going to jump ahead just for a second. This is a really interesting slide. So if you go back to 1988 or so, one thing that sort of has ticked along here is that rents always consistently go up. Okay? Whether or not the home price goes up or down, whether or not the stock market goes up or down, whether or not unemployment goes up or down, savings rates, income, it doesn't matter. One thing that goes up consistently over a year, and it's about 5.5% a year, is rent. People will, as you saw in 2008, 2009, they'll stop paying their mortgage because it takes a long time to foreclose on someone. But if they stop paying the rent in California, you can evict in 60 days. So they won't pay their mortgage. They'll stop paying cell phone bills and car payments, but they're not going to stop paying rent because they don't want to be homeless. I'm sorry. So one of the reasons we like this investment, and it just appeals to the broad market, is look at the housing stock totals here. We got 133 million units, almost $28 trillion market. It's truly the largest real estate asset class in the world, single family homes. Okay. Yes, sir.
Is Airbnb affecting your business at all? Do you see any effect?
No. I mean, there's 15 million single-family homes for rent in the United States. Less than 500,000 of them, of that 15 million, are owned by institutions. Blackstone is the largest landlord in the world. They own 50,000 homes. So there's 14.5 million homes out there owned by individual investors. What we call sort of a mom and pop seller, like me and my brother go and buy a house and we want to rent it out. That's the point, right? Even our company is still small comparatively in the country. So the market, the opportunity is gigantic. It's gigantic. And with what's happening in the economy today that you guys read in the paper every day or see on the news, wages have been flat, jobs are starting to come back, home prices are appreciating. Students have come out with student loan debt, drastic. They can't buy a house. So a lot of people are choosing to rent. And where do they find their rentals? There's a lot of multifamily construction. There's a lot of opportunity in apartments, but these millennials, so 26 to 35, in that family formation stage, they're looking for single-family homes. And so that's where we've been filling this market with our single-family home. Like I was saying, the population growth, you can see it here where we are, 2015, so there's about a $15 million spread between population and home supply. In the next 4 years, that's going to increase 25%. So population is outpacing new home supply big time.
Do you use your builds?
No.
I'll let fix and flip.
It's all, so we're not doing any development it's all existing single family homes. It's the market that we have become really good at is we are building homes for the first time home buyer. So in Orange County where we are, average price for a single family home is $635,000. If you're 23 years old and you're out of college, you're 27 out of college for 4 years, 5 years, they're not making enough money to buy that home. The average millennial makes less than $50,000 a year, $47,000.
You say building homes?
No, we're buying single family homes, adding value, turning around, selling for less than the average price in Orange County. Yeah. So the first time home buyer, there's nowhere to buy where we are. A new home construction in Orange County is over $1 million now.
You did say that you don't buy anything above 500,000.
We buy below.
You buy below.
We buy below. We typically put 10 to 12% in each house, and we target an exit price of between 6 and 6.25.
Are you targeting the foreclosure market?
We used to participate in that quite a bit. That's slowed down a little
Where you're
bit.
getting the price down, yeah.
Well, so the prices are appreciating. Right? California last year was over 6%. Foreclosure there's still opportunity there. We're just not as active. Maybe 1, 2 a month. Last month we bought 20 homes. 2 of them were off of foreclosure. But we've been operating in Southern California now for 7 years on a very large scale as an operating partner for the big guys, and then on our own and on behalf of our investors for all this time. So imagine all the relationships we have with real estate agents and brokers and contractors and agents. They're everywhere, and they know that we have capital to come in and buy homes, all cash, fix it, turn it in 150 days.
You say that the homes you buy just need light cosmetic, or will you take things that are major rehab?
Yeah, so it's a formula we have. We target that $500,000 price, 10 to 12% into it. So call it, we're putting 60 grand into the house, right? So we don't want to redevelop it. We're not taking it down to the studs, but we are we're turning a home that hasn't been touched since 1965, 70 into a model condition. So new floors, obviously paint, brand new bathroom, brand new kitchen, really nice appliances, everything new, said, you go to the website, you'll see the pictures.
Yeah, the landscape.
We'd all live in these houses today.
And I noticed landscape, you do a lot there as well.
I mean, so, like I said, we paid a lot of dump tax. We learned the hard way for a long time, since 2008, doing this one by one. And now we have an office in Rivers. We have our office in San Juan, we have an office in Riverside, we have an office in Los Angeles, and we have an office in San Diego. And boots on the ground all over the place. So this is sort of where we were. You asked me earlier, we've got 100 properties in Nevada. This is as of July 1st, so there's a few more now. But we've got 243 in Southern California, and we do have a small portfolio in Georgia that we bought a few years ago.
So saying Nevada is Las Vegas?
Las Vegas.
Not so
Yeah.
much Reno?
No, Las Vegas is where we're at right now. We have a partner over there that's operating with us. But you can see here, so a little more than half of the properties in California are rentals. Almost half are flips. Nevada, 96% are rentals in Las Vegas. We're not flipping in Nevada. We're really buying them for rent. Georgia, they're all rent.
How did you decide to go to Georgia?
So that portfolio came to us from one of our current investors. It was a 1031 exchange that we do on behalf of our partners, new and current. So what we did was we bought those units in exchange for units into our fund. And so now our fund is operating those properties, right? And so the yield, the rent that comes from those goes back out to all of our investors. It's a really neat thing that we've done with our partnership is we create sort of, well, JV partnerships on the side, but our fund co-invests alongside our investor so that our 86 limited partners are getting participation in the yield that we're helping someone exchange out of and into. You guys know what a 1031 exchange is? Yeah.
Do you have any kind of fee or whatever that you might be able to give some of our members for bringing you accredited investors?
Any fear?
No, fee.
Oh, fee. No, so we haven't, I've never worked it out ahead of time. I always sort of work it out on one by one. So if you guys want to bring people, bring them, and we'll work together. I mean, we're so transparent. We've been doing this, my partner Jeff Pintar and John, they've been doing it for 20 years. We're not in this for us, it's for the investors. So if you can bring people to us, we're happy to help you help them. Yeah, of course. So far this year, we've invested almost $100 million in 2016. We've bought 254 properties, 82 to 69 flip to rental. I think going forward for the next probably 6 to 9 months, we're going to go, it's probably going to change a little bit, maybe 75-25, 75% flip, 25% rent. The rental homes have appreciated pretty rapidly, and so it's getting hard to maintain that yield for our investors in Southern California. And we're not ready to move to Texas or Florida or anything like that. But the flip opportunity is still very, very good because the first-time home buyer has nothing to choose from right now. So this is what I was saying earlier. So the capital works this way. So your money comes in, it invests in PICR. PICR takes that money and puts it into Fund 3. That's our combined fund. Fund 3 allocates it either into flipping or rental income. So if you're in the flip portfolio, we're purchasing, rehabbing, reselling. In the residential rental, the rents are providing steady income, and that home price is ticking along at about 5-6% a year. What happens is, in the flipping, the money comes in here, that capital turns sometimes 2.5 times a year. So we're able to generate a plus or minus 25% return on that capital. Like I said, we're targeting a 10 to 12% return per asset. So think about that. You flip that house, you turn that capital 2.5 times a year. That's a 25% return, right? So 150 days is what we target. We're beating it to under 140, so that capital has plenty of time to turn. The rental income is beautiful, kind of mailbox money, we call it. It just comes every month. And now we've got a portfolio delivering close to $200,000 a month in gross rents. It's really a super investor-friendly model because you're an owner, pro rata, you're limited everywhere else. Jeff, our founder and CEO, personally signs all of the loan documents. Everything is in his name. So you're not limited, you're not participating in that. The investors for this capital that comes in, they receive, on average, the last 7 years straight now, we're in our 8th year. We've already delivered 8.7 to our investors through June 30th, but it's a 10% cash-on-cash distribution. We do that every quarter.
You have an outside or multiple outside management companies for managing the rentals?
No, that's a great question though. So Jeff is he's a real estate guy, and we have Pintar Investment Company is our investment arm, and Vertical Real Estate is our operating company. So they do brokerage, property management, maintenance, construction, leasing, everything. So we're not sourcing anything out, charging our investors fees. It's all in-house. And I'll go through this in a second, but I'll jump ahead for a minute. The terms for the investment is super simple. Your money comes in, it earns interest until the first day of the next quarter. On October 1st, the assets will be valued from a third party, and the share price will be set. Let's say the share price, today it's $52,848 for one share. Let's say it sets at $55,000 to keep the numbers round. $55,000 on October 1st, your money goes in, it's now participating in the preferred return on the profit. Investors earn, I get paid as an investor before I get paid as an employee. So investors earn a 6% return before the GP earns any fees. They don't collect anything until we earn a 6 first. After that, he collects a half a point management fee. Then profits are split 70-30. 70 to the investors, 30 to the general public.
And it looks like from the level we fix these up, there's probably not a lot of repair costs on these rentals once they're out there.
No, just like your formula before, we put a lot of that on our renters. A guy calls and says, hey, the light's not working. Oh, well, try this. You'd be surprised how many times guys who have access to a nice home being professionally managed with good service are willing to check the switch themselves, check the water outside, check something before we have to call a company or send our guy out and charge him $50. Right? It's really, really nice. We sort of, when you go to a nice hotel and you get that really good service, you want to go back to the hotel. Right? You go to a hotel that you found online, you got it for a little bit less, and the service was terrible, you're not going back. So we try to give really, really good service to our tenants, and we want them to come back, and they do. They stay with us. Most of our tenants, and when I say most, I mean 90% of them have been with us for more than 3 years. So they're continuing to rent from us.
They move out, continue renting those rentals, and you don't really sell the rentals, you hang on to them for maybe 10 or 20 years.
That's the plan. That's the plan. It's an evergreen fund. There's no plan to close it. But I will say we do sell rentals occasionally. Last year we sold 2.
People who are renting that just wanted to stay there and buy the house, or just some of the reasons?
No, the reason was that those guys left, and we bought the home in 2010. Both of them were bought in 2010, so they appreciated pretty significantly.
Okay.
And we thought, well, our average rent is about $1,500 a month or so. Both of those assets could deliver north of $85,000 in profit to our investors that quarter, as opposed to renting it out for $1,500 a month. So we just took advantage of it. We're like, well, the market is great. We can take the cash, we can reinvest it, maybe buy 2, buy somewhere else.
Do you think Pintar would ever consider doing lease to own for the tenants to maximize that sell point?
I don't know. We've never talked about that. This is the first time I've heard about it. Yeah. There's endless opportunities out there, right? We all know that. But we should definitely talk about that. Yeah.
Not that I'd be involved, but,
Yeah.
maximize your profit for your investors.
Yeah. Yeah, I mean, that's what this partnership is about. It's for the investors. I mean, without delivering returns to them, there's no partnership. So here's how we did last year against sort of NASDAQ, S&P, sorry, in the Dow. But the beauty of this, as you can see here, is that the blue is Pintar. So Pintar kind of stays steady along this line, right? It's kind of steady. There's no drop. You see the orange and the yellow and the gray, which is Dow, S&P, and NASDAQ, up, down, up, down, up, down. Pintar is more of a steady, consistent, dependable income stream that we deliver from the rents and from the flip activity. It's a much more, now it's not a get rich quick, you're not going to double your money in 60 days or 6 months. It's a long-term, steady, dependable investment return.
You said you started in 2009?
Mm-hmm.
Because the market, I guess around 8 or whatever, was headed down. And most people that try to rehab in a downgoing market have a real hard time. You guys must have done a really good job to be fixing these places up during that period of time. It's a lot easier now than it probably was then.
You know, it's funny, we made a lot of money flipping houses 2008, 9, 10, 11, and 12 was when it started coming back up. Because as you can imagine, when the market is falling so fast, as it did, and so far, people want out of their house immediately. The panic, the volatility is immediate and high. And so you can get in with an all-cash purchase and get them out of that situation immediately. And there's a lot of people like that, right? Especially in California, where the homes appreciated all the way to 2006, fell, and they didn't want it to fall anymore and be in it. They want out, right? So we're able to come in, add some value, and make money on the way back up. One of the things that we do that it's very unique to a real estate investment fund is we have a proprietary technology system that drives all this. We built out a system through Salesforce. So our investors actually have a live web-based portal that they can go into and see not just how their investment's doing on a metric, but how the asset status is tracking. How many homes are in construction today? Well, there's 47. Last quarter there was 35. They can see the performance increasing or decreasing. They can see what rents we're getting on each home. If we have before and after pictures of the assets that are currently in the portfolio, they can see those. They can see, they could actually see and track what we underwrote the property for and what the return was. So they can track our buying process. They can track our returns asset by asset. And that's really, I don't think any other real estate investment fund is doing something.
Salesforce, third party, or did you guys develop that?
No, so we developed it within Salesforce. We have our own engineer.
Within Salesforce.
Mm-hmm. Yeah. Again, this is kind of what I was telling you earlier. So investors earn a 6 before we get any fee. So we get a half a point management fee after the investors earn their 6. After that, profits are split 70-30. Distributions are quarterly, and we're very low levered because we learned 2 things in 2008 and 2009. You shouldn't sell a house to anyone who can't afford it, and you shouldn't let them over leverage. You shouldn't let them take out their all of their home equity on that property, right? So our document says we can go to 60% debt on our portfolio. We're at 42 now. We'll probably never ever make it all the way to 60% because our homes just turn too fast. And then the other thing is, guys, is like I was saying, so it's individual accredited investors, investors with 401k and IRA accounts, family office, fund of funds, RIAs and CPAs who we are talking to, are marketing to, and are welcoming into our partnership. And that's all I have for you guys. I have a bunch of information here to follow, but I didn't want to go through all this information unless you guys have more questions for us.
Yeah, I guess. On the accredited investors, we come across investors that are making 200,000 or more. And the big complaint or big problem is that they can't get any tax write-offs, they can't qualify for an IRA because they make too much money. And it's kind of difficult to kind of place in different types of investments, although we do have Anderson advisors kind of helping work with those type of people. Bringing them into you and your investments, it's not like they're going to need any write-offs because that's not really part of the equation. They're just going to pay the taxes on whatever the income is, depending on how they're structured and how they protect that income from being taxed. That's what it sounds like.
So the investors, we all get a K1 at the end of the year. So we have a third party. So our fund administrators, vertical advisors, our counsel is Rutan and Tucker, and our third party accounting firm is Wines out of Long Beach. So Wines prepares the K1s for us. The fund administrator delivers it to the investors. The K1, as you know, it breaks out how your income is earned and how it's going to be taxed. The way the fund is set up, where we have your capital earning income off of the flip and the rental, you get ordinary income from the flip, you get ordinary income from the rental, but you also get to participate in depreciation. So last year, my K1, we just got it about a month ago. We were pretty late because we had 3 entities last year. We rolled them into one. And then Wines it was our first year with them, so it took them a little while. But the good news is, let's say for every about $10,000 in earned income, that was reduced and offset by the depreciation. And I'm no accountant and I'm no tax advisor, but it's a significant discount to what your taxable income is. So in other words, you see your ordinary income earned from the activity in the flip and the rental fund, and then you see your K1, and it was a 15% discount off of that. So if you earn 10, you're taxed on 85.
And the depreciation is built in itself. It has nothing to do with repairs and maintenance.
Correct.
And that's probably something you guys handle within your own business, trying to help yourself out with that, because you have an expense, but it's not something your investors are dealing with.
No, they're not doing it. No.
Gotcha, okay.
No. They're just getting the tax benefit of the depreciation of the asset. Yeah. Do you have a question?
Oh, I thought you were going to show us some before you bought it and after you did it.
There we go. So here's a before, right? Older kitchen, after, brand new. Here's a before bathroom. Here we are after. So here's one where we actually added a room to this house. Before, well, obviously, right, here's the fireplace. Here we are here. We added space going out towards the backyard. And so I think most of my pictures are on, so if you go to our website, pintarinvestmentcompany.com, and I've got some cards in the back for you guys, you'll see all kinds of pictures.
Where do you get your properties?
What do you mean?
Realtor, for fix and flip?
Yeah, so, being in the market that we have been for 7 years now plus, we've got a lot of relationships out there with
Banks, realtors,
all
everybody.
Yes.
Asset managers.
So we have 3 asset managers in-house in San Juan.
Right.
So they cover geographically territories, right? And then now we've hired a guy in LA, we've got a guy in San Diego, and a partner. So all of them have relationships with people in those local markets bringing us deals, not to mention searching for the deals as well.
Right.
So it's all of the above. It's banks, it's agents, brokers, right?
Any way you can find a good deal.
Exactly. And it's sorry.
So you're up for, if anybody, it's not that you're going to accept every deal from it. It could be 1 out of 10 or 1 out of 100, who knows? If somebody here wanted to try and pass some deals for you guys to review, just to see if you're interested, who should they contact?
So just send it to me. ksharp@pintarinvestco.com, and I'll forward it on to John Kralik. He's our president of the company. He does all of the, he runs the operation, right? So he's in charge of the asset managers, and they'll just, you know, it's an analysis that we would go through. And you want to talk to them about our formula and the homes that we're looking for, the returns that we're targeting, and the time frame that we're targeting for our investors. It's we're all cash buyers, so we can act real fast, but it's got to make sense for not us as a company, but for our investors. And we're pretty selfish because we're heavily invested alongside. Right?
It's got to be a good deal.
It's got to be a good deal.
So two opportunities here would be for people to bring you accredited investors and possible home deals, and certainly if you guys got the money, which for me, if you're an accredited investor.
Yeah, you got to be an accredited investor. And the beauty of this is it's a limited partnership and a real estate investment fund that is basically institutional grade investment with double-digit returns. That pays like a bond. Imagine a bond that would pay a 2% return, right, on your cash. This is paying a 10, and it's a passive income. You're not working for it. You're trusting your investment to the professionals at Pintar, and we have a 7-year record now, vetted by Goldman Sachs and Colony and KKR Beezer and family offices that we've worked with, and now we're on. Do you guys know who Realty Mogul is? Have you guys ever heard of
Yes.
this?
Oh, yeah.
So we're on. If you go to Realty Mogul's website, they have our offering is on their platform, and that's a really in-depth diligence. It looks like an institutional type investment.
I think that they're going, aren't they transitioning from single family more to commercial?
So they're everything. I mean, they've got a fund on there for mobile home park in the southeast U.S. They've got commercial deals. I think we are the only single family home offering on their platform today.
Yeah.
But they're all over. They do a lot. We met them a couple years ago, and they wanted to do. They do debt and equity. That's their big thing. And most of their investments are debt based. We're one of the few equity opportunities.
But one thing that we should have in this town is accredited investors someplace.
They gotta be here, right? There's more than one, I'm sure.
But finding single families under 500,000 in this town, good luck.
Well, 500,000 in this town, no, and that's why you're working down there, not here.
Right,
But there's
right.
certainly accredited investors.
Oh, you mean homes?
Homes in Santa Barbara?
Yeah.
Yeah, less.
Yeah, no. The markets we're operating in is, San Diego County, Orange County, Los Angeles County for the flip, and then for the rental, Inland Empire, San Bernardino, Riverside, and then.
Those could be found virtually. You don't have to live down there to find those deals that are passed on.
Sure. Yeah, we're not getting all of them. But the number one problem that we have isn't deals. It's more capital. There are more deals out there than we have money for every day of the week, and that's been that way since 2009, and it's not going to change anytime soon.
What do you do with your surplus properties? Do you wholesale them or something?
No, we pass.
You just don't do it.
Yeah.
Yeah, so it's the accredited investors that you need the most.
That's right.
So if you live in Santa Barbara and you're surrounded with lots of high-paid wage earners, this is where you want to take them.
It's a great.
Maybe do something for doing that.
Yeah, it's a great place. You'll be, well, just call me. We'll talk about it. Just call me. We'll talk about it. Yeah.
We'll talk.
We'll talk. Well, that's it, guys. Any other questions?
Thank you.
Yeah, thank you, guys.
Thank you very much.
Yeah, thank you.
Really fun to listen to all that. You guys are doing big stuff.
Yeah.
I'm impressed.
Thank you.
Also happy to know that there's, a place that we can take virtual deals from those areas, plus accredited investors, because we run into a lot of them up here that just like, I don't know what to do.
I don't know what to do. I mean, that slide I showed with the stock market, people are tired of the up and the down, not knowing what's going on. Our investment, it's not a guarantee, but it is a very slow and steady, dependable return. And when you have that sort of predictable stability. Our partners love that. They've been with us for over 40 years now on average. We've done really, really well, but the investment isn't about the return. It's really because the guys that I work with are very, very good operators. They're professional real estate guys.
However, it's against the law for us to say that we guarantee something. The only people that can say we guarantee is the United States government.
Yeah, there's no guarantee. No. But it's a really good, safe investment. Long term.
Sounds really
Yeah.
Thank you very much.
Thank you.
Look forward to doing things
Yes,
with
sir.
you.
Thank you.
And we're actually through a lot sooner than I expected. Let's see, we're to 4. You know, we've got the place at 4. It's 3 o'clock now, so we've actually got an extra hour that I kind of didn't expect. And you know, I really appreciate you doing what you did because you've got a lot to offer, and I can't wait to find out how we can, you know, work with you and
Yeah.
look at those opportunities. So seeing as we have a little extra time, I'm just thinking, is there anything that you guys would like to do or hear or see or, you know, in this time? I mean, I could talk more about rentals, I could talk more about age big, I could talk more about going green or any kind of computing support. You know, you guys are like, well, what do we do with our, you know, how do we do what? Or if you just say, hey man, we just want to get out of here early, that's all we really care about, we can do that too.
Just networking.
So, network, okay.
Oh,
Does anybody want to get up and promote their business and what they're doing?
What they're doing, yeah.
What they're doing? You guys know how to get a hold of Kevin now, right? In case something comes up.
Yeah. I'll pass them around.
And the information back there. So, you know how that works, and we're certainly going to be knocking at the door saying, hey, you know. Because, I mean, let's face it, we're all looking for cash buyers. It's like, where do we find a cash buyer when we have a deal that we want to flip? Where do we go? How do we make sure it's going to happen? Well, if it's a decent enough deal, Kevin just might be your cash buyer. Okay? And not here in town, but virtually however you find it someplace else. Which, that's part of what we do at Age Big, is show you how to do that and get you involved in all that kind of stuff. So, unless, you know, anybody's got any other questions or want to jump up and promote something they've got or talk about anything, we're going to cut it a little bit short. We've got a lot of food back there. What's the deal there?
I don't know.
We never had, I mean, by this time the food's all gone, the drinks are all gone, everything's all
You
gone.
know what I think happened? They
What?
cut out the cookies, but they doubled the sandwiches.
Really?
I know, we better check our bill. I don't remember.
Yeah.
I,
They cut out the cookies, they were too expensive.
When will this be up?
10,
oh, this should be up in like a couple days.
maybe
A couple days?
Yeah, like probably like 3 days or
I see a
so.
lot of food back there, so, you know, if you're hungry and you want to take some with you when you go, grab up some food, take it with you. And we will be back here next month. I don't have currently a speaker for next month, but we'll figure it out as usual. And, you know, November, December, we'll be laying low and not doing
It
it
was very smart.
because everybody's got their focus on Shopee and Drop.
Traffic was.
We're not going to compete with that, right? So thank you for being here. Appreciate it.